Anybody who has taken our course knows I asked myself three questions before I enter a trade. Number one being, what is the trend? Number two being, what phase is the market currently in? And number three being, is price currently at a key level? So the market doesn't move straight down or straight up, right? The market moves in two phases. The market moves in a push phase, an exhaustion phase. Push phase, exhaustion phase, right? So once I identify what the trend is, I want to be trading in the direction of that trend. If the market is in a downtrend, I'll be looking for sell opportunities. If the market is in an uptrend, I'll be looking for buy opportunities, right? So the second question I ask myself is, what phase is price currently in? So if price is in a push phase, I try heavily to avoid trading the push phases because I know after every push there must be an exhaustion. After every push there must be an exhaustion. So if these push phases induce me to enter the market prematurely out of fear of missing out, if the exhaustion phase comes, there's a high risk of me being taken out, and I could have actually gotten into the market at a better price. So in this example right here, let's say I open the chart and I see the market moving in a push phase, and this push phase makes me feel like, oh no, price is going to leave me, so let me just enter the market outright here, right? But we already know that the market moves in two phases: push phase, exhaustion phase. So if this move right here makes me believe that the market is going to go on without me, if I take this entry right here, if the exhaustion phase does come, there's a high probability of me being taken out, and I want to avoid that. So for that reason, I like to wait for the market to enter an exhaustion phase, and then do I take entries when the market is in an exhaustion phase? Not yet. I have to ask myself question number three: is price at a key level? I want to be taking my entries at key levels of support or resistance, because the traders that are at those levels are going to provide the necessary protection for me against price. I want to make it as hard as possible for the market to take my money. So in this example right here, right, I might see that the market is in a downtrend, correct? So do I take the decision to sell right here? No, because I want to make sure I know which time frame I am at. So this is the 15-minute time frame. The 15-minute time frame does not give me the full story of what happened until price got to this point. So I want to take information from the higher time frames, combine it with the information that I'm going to see on the lower time frames, and that's gonna help me make accurate decisions. In order to know where we are going, we first must understand where we came from, right? So for that reason, I'm going to start on the daily time frames. So I'm going to reset my chart right here. So what was happening? So once I start analyzing from the higher time frames, I like to plot my levels of support and resistance outright. So I'm gonna plot this level of support right here. I'm gonna put this resistance right here. So overall, the daily time frame is showing me that price is currently in a downtrend. I have this push phase right here, this big exhaustion phase, and sorry about that, and possibly a new push phase in the works. So does that mean I am selling right now? No, but it just shows me where the overall market is heading. So I'm going to look for sell opportunities, but I'm going to be looking at these opportunities on the lower time frames. So I just use my higher time frames to plot those important key levels. So I'm going to drop down to the 8-hour time frame to see if I can outline more important key levels. So on the 8-hour time frame, the issue is still the same. I'm seeing price in a nice downtrend, just like the higher time frame. So I'm going to be plotting my key levels right here. See, this was previous level of support right here, got tested as new resistance right here, and price just dropped. And as you can see, the market moves in two phases. We have the push phase, exhaustion phase, push phase, exhaustion phase, push phase, exhaustion phase. So now currently price is in a push phase. So we already know that when price is in a push phase, we do not take entries because we know that the exhaustion phase is bound to come sooner or later. So if I decide to take my entry right here, I might be entering the market at a bad price. So I'm just going to wait to see if price is going to enter an exhaustion phase, and then once it hits a key level, I am going to place my entries there. So I'm going to drop down into time frames, into smaller time frames. Let's see what the 4-hour time frame has to say. The 4-hour time frame pretty much is saying the same thing. I'm just going to adjust these levels right here just for the purpose of having a neat chart. I'm gonna just put this right here. So the importance of starting your analysis from the higher time frames is that right now you get to understand why price is acting the way it is. We know that the daily time frame is in a downtrend and the 4-hour is in a downtrend. So my bias just went from 70% I'm selling to now 80% I'm selling, because the higher time frames and the lower time frames are sort of telling me the same thing. So does it mean I'm still going to sell right here? No, because the 4-hour time frame is still pretty much a higher time frame itself. So I'm going to try and look for opportunities on the lower time frames. Gotta drop down to the 1-hour time frame. So remember guys, those 3 questions. Number 1, what is the trend? Right? You want to be trading in the direction of the trend. You don't have the capital to shift market direction. So, just use the wave, surf the wave, You can't influence the wave, but all you can do is surf it. That's how you make money in the forex market. So, still the same thing. I'm going to be drawing my key levels right here. So I have a little support level right here that I'm going to draw. Then we have a little resistance level right here. So now you see the daily time frame and the 1-hour time frame still seeing the same thing, still saying the same thing, that price is currently in a downtrend overall. So my bias just went from 80% I'm selling to 85% I'm selling right now. Does it mean I'm going to sell right here? No, I'm going to drop down to the 15-minute time frame to see how that's going to behave, how that's doing. So yeah, here we are. We have a nice support level right here, right? Nice little support level. Have our resistance level. So if you have taken our course, you understand the importance of key level number 1 and the importance of key level number 2. So I still ask myself the same questions. Number 1, what is the trend? Price is currently in a downtrend. What phase is price in? See, price here was in a push phase, exhaustion phase. Now price is beginning its push phase. Is price at a key level? No, not yet. Price is not at a key level because the buyers right here might still be able to take price up. So what I'm going to do is I'm going to wait for price to show me a convincing break of this support level. Once I see this convincing break of the support level, I'm going to wait for the exhaustion phase, and once I see that exhaustion phase, I'm going to wait for that exhaustion phase to test either this key level number 1 or key level number 2 before I decide to commit to an entry. So I'm going to wait to see if price drops and then goes for that exhaustion phase. After that exhaustion phase, I'm going to take my entry all the way to the downside right here. So I'm well aware that there is liquidity at this level, there is liquidity here, and there is liquidity here. So some people might say, well Abi, why don't you just take this entry right here, put your stop loss right here? So I'm not a breakout trader for the simple reason that if I decide to take this entry right here, I don't even know if price is going to reach my take profit level, right? So I'm a break and retest type of guy. I like for price to break and then retest. After price retest, I want to see that price is retesting this previous level of support as new level of resistance before I finally decide to take my entry, right? And when price does reach this level, when price does react at this new resistance level, I'm going to put my stop loss right above price because I want to have structure protecting me. I want to make it as hard as possible for the market to just come up here and take my stop loss. But if price fails to hold right here, the next place I'm going to look for my entry would be key level number 2. So I'm going to extend this line right here and then see if price comes up here. You have to be prepared for everything. You have to be prepared for anything that happens. So price might not react to key level number 1. So in case it doesn't react to key level number 1, I'm going to wait for it to react to key level number 2. And all that's left to do right now is wait, because 80% of trading is waiting for price to come to you. We're not in the business of chasing price, chasing money. No. Successful trading is actually very boring. You have to wait for price to come to you. Price action is the best indicator out there. So right now I'm going to leave this and see how it's going to play out. I'm going to wait for that break, the retest, take my entry down here.